York. Hey, Will.
Hey, Morgan. Yes, indeed. I'm delighted to be with the host of the conference, no less, as well, the president and COO of Goldman Sachs, John Waldron. John, thanks so much for having me.
Thank you for being here. Thank you for covering our conference.
No, it's great to be here, as it always is. End of the year, people sort of setting out their stall expectations for the year ahead. What have been the key themes for you so far from all the banks we've heard from?
Well, a lot of discussion about the economy and the consumer in particular. The strength, the underlying strength in the consumer, I think, is showing through, and you're hearing people talk about it a lot today. Regulation and the election and the prospects of whether there might be some shift in the regulatory environment, which obviously affects banks meaningfully. And then I would say an incremental conversation this year may be more pronounced than before around technology, the impact of technology, the amount of technology spend. Where are we in the disruptive phase of financial services more broadly? That's become more of a prominent theme that we think about at Goldman Sachs quite a lot, and it's certainly been a focus today with our clients.
We'll definitely dive into what you guys are doing on that front coming up. In terms of the macro sentiment, is the consumer strong enough to be offsetting perhaps less lackluster, a little bit more lackluster kind of corporate momentum?
I mean, we're pretty constructive on the overall economy, certainly in the United States in particular. The economy feels, if anything, like it might be accelerating again from what had been a little bit more of a patchy 2019, certainly in the first half. I do think the Fed's easing bias has made a big impact. You know, our financial conditions index is operating at a very relatively historic low level. So we're seeing that implication of easier policy coming through into the economy, and it's become much more of a stimulant for particularly consumers, but corporations as well. Manufacturing weaker, no question. But again, 70% of the U.S. economy is really driven by the consumer. So as goes the consumer, typically that's where the economy runs.